Now let's talk about inflation. When you talk about inflation in the United States, it now stands at 3.2%. In the United Kingdom, it's still hovering around 8%, and the British economy has grown unexpectedly. In the month of June, it has risen about half a percentage point. It brings the entire April to June quarter growth over in the United Kingdom to 0.2%. In the US, the economy grew at 2.4% in that same period between April and June. So there is growing consensus now that the US could actually manage to tame inflation and avoid massive job losses. Here in India, the government is trying to manage food inflation. The RBI has resisted that entire temptation to raise interest rates further. At the same time, though, the Nifty has seen a correction. It's happened for the third straight week. So the next few weeks, they're going to be crucial because India is trying to put the inflation genie back in the bottle. Local factors aside, are there any global cues that investors must bear in mind? Let's discuss this with our guests. And for that, our guests are joining us. Ajay Srivastava is with us along with Anurag Singh. Gentlemen, great to have you with us this evening. Ajay, in the US, we're looking at the month of July. We've seen through their consumer price index as well, their CPI, that prices were 8.5% higher than they were 12 months ago. Everything from food to gas prices, they've gone up. Here in India, crude oil prices are helping us for sure, but food prices, those are hitting the roof. How do you assess the entire scenario across the world, especially when you compare what the Fed has done with what the RBI has done? Because globally, we've seen the impact of the pandemic play out. Inflation is a battle that central banks across the world had to fight. But now, are we reaching the end of the battle against inflation for most of the big economies in the world?
Well, I wish the answer was yes. And it is obviously answer is coming no, because as you saw, you said oil prices are benign. Oil prices are now above $85, which was the RBI benchmark in India. And for the US, it's the highest in the last 6 weeks. Food grain prices, you've seen what's happened to wheat, what's happened to rice, what's happened to commodities, meat products, milk products. Everything is up and up and up at this point of time. You know, what has held back the markets at the end of the day is liquidity. In Indian market also, it has been liquidity. It is not that the inflation is tame. India's target inflation was below 4%. RBI is saying we'll come at 5.4 at the end of the year. Indian RBI has given up the fight on inflation, left the savers to the mercy that we'd go back again into negative interest rates. So, you know, we have to take a perspective that inflation is there right now. It's in your drawing room. It's in your dining table at this point of time. It's not going away. I think RBI in India miscalculated it. Fed has done an increase just now. Most likely in September, they'll do another increase given the fact that the producer prices have started to edge up again in the United States. The data came last night, is again edging up. So I think the people who had bet that the inflation genie is back in the bottle will be sadly disappointed, unfortunately. But for stock market, you know, inflation is good because optically your balance sheet goes up, your sales go up. Typically, in most product areas, your margins go up, as we have seen what happened to the banking sector. The margins went up dramatically. So while inflation is bad for the economy, for the common man, not necessarily for most corporates in the world, where the profits are better and they're able to command the premium in the market and get away with price increase, and certainly start from banking financial institutions. So from stock market perspective, good. But keeping aside inflation, Vikram, most important is liquidity. For the first time, Indian RBI has acted on liquidity, and that also very tamely saying, I'm going to review it in 1 month. Don't panic. I'll give you enough money. And Indian market is showing that when you put so much liquidity, what happens to the system at the end of the day? Your interest rates only work against individual lenders, but so much liquidity works for the larger corporates and the banks. So we are in a very peculiar situation. So is the world, where we believe we fought the inflation. Is not fought. Corporates have done reasonably well. In India, maybe about 20% corporates have done quite well, but valuations are stratospheric. So I don't know where it's going to go, but I know for certainly the margin of comfort with most stock prices today is much less than it was 3 months back.
You're hearing everything that Ajay is saying, and you've consistently maintained that the US needs to kind of go ahead with that trajectory of interest rate hikes. As far as Paul Krugman is concerned and his considered opinion is concerned, he is saying that it was at one point considered unlikely that we would be able to control inflation in America unless we saw a sizable unemployment situation, which has not happened yet. And yet it seems like they've done well on the inflation front. Here in Chicago, tell us about the American picture and how they've been able to do it, because the question is still, how have you managed to tame prices at this point in time where we're talking about interest rate cuts coming in and that cycle starting already?
Okay, so Vikram, interesting questions. First of all, I think kudos to Ajay. He says it like things are, right? So and like one can never dispute those facts, right? Is one of the very few individuals who really puts the things in the right perspective. So Vikram, out here, let's forget the headline number. Look at little beneath the hood. The core inflation is 4.7. And why the markets rose and then really fell down later in the day yesterday also was because the core services stays at 6.1%. It persistently grows at 4% to 0.4 to 0.5 month-on-month basis, which is pretty bad. And then the shelter inflation, which is basically 40% of CPI, is not budging from 7 to 7.5% on an annualized basis. So Vikram, ultimately, these numbers have to reduce substantially. And that's where the inflation gets sticky. It gets into the psychology of individuals. You see all the negotiations, wage conversations in US that are happening now. Vikram, they're not happening at 2%. People are doing it at 5 to 7%, which tells us, of course, that people in the inflationary expectations, people don't have this 2% number yet in their minds. You spoke, Vikram, about Paul Krugman. Look, I think we are those are very big names, right? But I think the context that we need to understand out here in US is that things are pretty open and well laid out. There are left-leaning economists, there are right-leaning economists. Additionally, there are revolving doors within the government, corporates, and the universities in the US. So what that means is effectively somebody might be on a university today, might be Treasury Secretary tomorrow with the government or some other position in the White House, and then go back to corporates again to do a very different kind of a job, and then might become a lobbyist as well, right? So we have to take that with a pinch of salt. Paul Krugman is a very noted left side economist, which means that they all believe in the demand side economics. They completely support the current administration, which is left-leaning. Right. So take that with a pinch of salt. It's not surprising, but just look at the data. Numbers don't lie, Vikram.
Absolutely. So as far as I understand it, and correct me if I'm wrong, Ajay, that demand side pressures, those are easier to control when it comes to central bank action on interest rate hikes. But it's the supply constraints that really takes the wind out of any kind of strategy that a central bank may employ. On that count, when it comes to food inflation and the kind of trajectory of higher prices that we are reaching, and perhaps now trying to control, even today we are talking about sugar prices and the government trying to bring in a mechanism in which they are going to try and control it as we go into festive season. How are these supply constraints been tackled by central banks, and how has the RBI really planning to do it? Where do you see the peak interest rates now with the current trajectory of growth in inflation numbers?
So, Anurag, thank you very much for your kind words. I think, I don't know, this is a compliment, then I must thank you for it. Yeah, when you talk about just the sugar policy just now, that's a way to control inflation. No, it's not a bright idea, because the world has shown that when you control supply, what is the incentive for a sugar company to start investing in a sugar factory or add more sugar? Now, what you're doing essentially is telling every supplier of commodity in India that if there is a time to make money, and which is the money you'll make to reinvest in your business, I'm going to come in and stop you from making that money. It happened to oil. That's why oil exploration is at the historical low in India. It's happened to sugar. It's happened to wheat. It's happened to rice. So, you can do this at the risk of really raking up a long-term problem in the country. And that's what's going to happen. No big sugar company will say, listen, if today the global price is at 45 and Indian price is 35 rupees to a kg, but I can't sell globally anything, what's the sense in keep making more and more sugar in this country? The ethanol situation which came up, nobody thought that ethanol was produced by grain with policy which came up. Now what's happening? Now you ban use of rice for ethanol. Now, what happens to the ethanol factory setup, which had rice as a staple? So, but coming back to what you asked the question, Vikram, the fact is Indian RBI tried to do a fine act of keeping the liquidity up in the system while optically fighting inflation by higher interest rate. All it did was hurt the normal consumer where EMIs went up, but the liquidity was so high. Till yesterday, RBI governor himself said he had 3.5 lakh crore surplus liquidity in the system, and he was forced to suck it out by the 10% CRR. When you put in this kind of liquidity in the market, what Anurag said is you just inbuilt inflation in the system. People assume that inflation will happen, and therefore you ask for salary increases, you raise the price of the products, and so on. So now what is happening is that the fight is not with RBI anymore. Fight is with the government right now, with the sugar policy, the wheat policy, the right policy, and as a stock market person, you kind of wonder which company comes next at this point of time. In terms, we saw what happened to steel last year, where there's a complete collapse of the export market with steel that put a duty on that. So, from a stock market perspective, you got to be very circumspect that how much it will play for your portfolio, these controls. And certainly, if the liquidity tap is dried up, that's a big no-no for the stock market. So if you're a stock market player, you need to be consistently clear that if liquidity dries up, and liquidity for India also means FI supply, and which has dried up in the last 2 weeks, it's a direct correlation. They stopped buying in the last 10, 12 days, and you saw what happened to the market. So I think India, government policy on all these, and liquidity will play a game as you go down the next 2-3 weeks. But it's a good thing that the market corrected. You know why? Because it's bad for investors to believe they can always make money by buying. It's a wise thing for a market to tell you it's not always the straight line.
So that kind of correction, Anurag, is something that you see happening to a larger extent on Wall Street as well, because as far as central bank action is concerned, their entire drive is to manage growth against those inflation numbers. As far as the Fed's actions go and how the markets have reacted every time there has been that kind of strategy to hike interest rates, how have you seen it pan out, and where do you see interest rates peaking at this point in time in the US?
Hard to say, but I think all I would say is, and look, this is a Friday. We don't want to do any doom stock right now, right? And but I think, look, here is the point. The sense is that markets always try and look for a clear picture, and they want to run away with that. That clear picture, Vikram, we don't have right now. And the sense is that this kind of gradual struggle with inflation will kind of continue for a while, maybe well into 2024. And it'll be gradual, it'll be slow burn, and Fed will not take the foot off the pedal, right, unless it is really contained, right? Because they are the last ones who want to really put a loose policy right out there, right? So markets will keep guessing, but ultimately, again, it will come back to stock picking and earnings and all of those things that portfolio managers do. This one-way direction, I think Ajay pointed this out, this harms the market more, because then it kind of invites all kind of wrong elements who expect that you just put money into the market and see it rise the next day. So I think that's where we are in, Vikram, and I think we'll have to just weather this out. Ultimately, it's going to be a couple of years, Vikram, my sense.
Right.
And my sense is that Fed might have to do a little bit more than what we think they might have done so far.
Yes. And we've seen how the RBI has moved, taking a few cues from the Fed. Of course, something that they will not talk about at length, but that's exactly what has happened. Ajay and Anurag, thank you very much for joining us with your perspective on it.
Have a good weekend.
You too.
Thank you.
You too, Ajay. Thank you.